Hi, I'm at the Flame University in Pune at the Law, Economics and Policy Conference. I'm in conversation with Renuka Sane, who is the Associate Professor at NIPFP. Renuka, thank you so much for taking the time. We were speaking earlier about the research that you've done in the space of household finance and the regulations that affect the products that apply to these groups. And what you were saying is that in several instances, to fix a specific problem, regulations that come in, unfortunately, also tend to pose a barrier to financial inclusion. What are the instances where this has happened?
Let me give you a couple of instances. So let me go back to 2010 when there was a microfinance crisis in Andhra Pradesh where some customers had committed suicide allegedly because there were coercive collection practices by the microfinance institutions. Now it's a terrible thing to happen if a person, has to die because collection is there are strong arm tactics to collect repayments. However, the reaction to this was that the state government of Andhra Pradesh effectively banned microfinance in the state, and that was very expensive to consumers because they lost a source of credit. And B, what happened was that we ended up with microfinance institutions being regulated like NBFCs. We have a new category now called NBFC MFIs that have a lot of prudential norms placed on them. Now, on the one hand, of course, it has helped because the sector is cleaner. You have larger NBFCs, there's probably more capital coming in. But on the other hand, we do know that higher capital requirements meant that many of the smaller MFIs that were in that space probably just had to fold. Now, in an environment where access to credit is so difficult and supply is so constrained, was this the right solution? So, this is effectively a prudential solution to a consumer protection problem. It's not to say that we don't need regulations on consumer protection. Of course, we do. But was this the right tool? And standing today, it's more than 10 years that we saw that incident. Are we taking a look back at whether this was the most effective policy? What are the good things that have come out of the policy? What are the bad things that have come out of the policy? If there were to be an event like this again, for whatever reason, what are the policy tools that we would use? I don't think that there is enough introspection about the consequences of some of these regulations that we do apply. A more recent example that I could give you is the card data ban that the RBI has placed, which is that, we knew that there were transactions on the digital space or in the digital space that were going wrong. Data was being hacked. And therefore, the RBI came up with a mandate saying that merchants and payment aggregators cannot store card data details. And the RBI has also mandated that you have to use a policy of tokenization so that these transactions can go through. Now, here again, was there a cost benefit analysis done of this problem? How prevalent is the problem? If your card data is lost, how much card data was being lost through these merchants or payment aggregators? We know there were a few hacks to say the Domino's website or to some other website, but how big and prevalent is the problem? What are the consequences of the problem? Could there have been other solutions like liability frameworks that may have worked better? We do have some liability frameworks. Why are they not working? Instead of that, why have we chosen a mandate whereby we are forcing a particular solution onto players? And what is the cost of this? So we know, for example, that post this ban, a lot of smaller players in India just lost their subscription services because money was now not flowing in. So in order to solve one problem, and we don't know the extent of the problem, we don't know the consequences or how big the problem really was, we have created another problem whereby a lot of small players just lost their ability to collect subscription services. We are imposing costs on players to do tokenization. Now, was tokenization the best way to deal with the problem? Could the industry not have come up with solutions itself? So there are a lot of these issues that come out in the way we try to solve consumer protection problems.
Okay. And these two instances, of course, are just two instances of many such that you have come across. The question then is the regulator is involved to a certain extent in getting feedback from the industry. But what else beyond that needs to be done in the regulation formulation phase so that this aspect is taken care of?
I think that while there is some public consultation process, it's far from clear what the regulator is doing with the comments it receives. For example, often the comments that are received and the decision that the regulator has taken on whether to regard a comment or disregard a public comment are not known. So it's not clear what comments came to the regulator because we don't see them on the website, and we certainly sometimes we do see them on the website, but certainly we don't see the reasons why the regulator said, all of you people are saying XYZ, but I still disagree, and these are the reasons why I disagree. So that is just absolutely not known. And I think that we need to improve our public consultation process such that we force the regulator to take, or give us explanations on why it is choosing something and not. Another thing that I would really add is that the regulator needs to put out a cost benefit analysis of some sort. I mean, it can never be complete because you're thinking about costs and benefits of an event that has not happened, right? So what is the cost going to be of a tokenization or a card data mandate? It's hard to know that, but you can anticipate it, right? That's your job as regulator. And we don't see this thinking as to why did you arrive at this policy prescription? So how big was the problem and why did you choose this? And what is it that you expect out of this? So that 5 years later, could you look back and then tell us that did this policy meet your expectations? Was it the right thing to have done? Did new problems start to occur? And does that change the way we think about the next problem that will come? I think this process is entirely broken I don't want to single out the RBI because it is pretty much broken across the regulatory landscape in India. And I think that that's a shame because we have so many learnings from the last 20 years and we are not able to introspect and say what worked and what didn't work. And, how should the policy process be informed by what has happened in the past?
And certainly, and this is, I guess, even more important in the near future based on the kind of development of technology in the financial space. And that will need a lot more thinking on the policy formulation front. Thank you so much for taking the time, though.